Hey there, it's Blair here. Thanks for joining me this weekend for this weekly video. It's Sunday, June 12th. We're going to start with a review of what we anticipated would happen on last week's video. Last week I mentioned that the small pivot here on June 1st looks like it turned into a double top. So if we scroll back here, we can see the two major tops. And I also mentioned that I expected there to be a completion of this small pivot move coming early this week. So Monday the 6th, Tuesday the 7th. That was my expectation heading into this week. I was probably half right on that. We did get a completion of that double top. We just did not get it early in the week. So we chopped around a lot for Monday, Tuesday, Wednesday. But then when Thursday, Friday came along, we got a very clear completion of this small pivot cycle. So let's turn on what we talked about last week using the Fibonacci retracement set up with the sub magic levels. So I'm going to turn these on and we can take a look at how this would have helped us to make good short-term trading decisions during this week that was kind of, 3 out of 5 days of chop and then 2 out of 5 days trend. So these are the exact same sub magic levels that we identified in last week's video. I will put these numbers in the video description here so you can use them in your own trading. But I wanted to share how this would have helped navigate this week. On Monday, we had a move up above the 310 orange magic level that was rejected here at the sub magic level at 312. So we can see here our first magic level retest failure that would have led to a nice 4-point move down on the Qs. Let's turn on the signposts. I've got some of these failures marked already on the chart, so we can take a look at those in detail. Here is a test of the sub magic level at 308 that failed. Here's another setup, a bounce off the 304 magic level that had a retest, did not go through. So this would be a bullish magic level retest failure. This guy here, right there. So basically the setup is whenever you see a second retest of the same magic level, trade in the direction of however it goes after that. So basically you can come into this expecting one of two things to happen. Either there's a successful penetration of the magic level and price continues down, in which case you can short that. Or in this case, we had a failed retest. It retested the 304 magic level and then it popped up a bit. Same thing here. We masked below the magic level at 308, came up a little bit, didn't have enough energy, fell back down, gained some energy at 304, and then moved back up. And then this one is a little different here. This guy here at the orange magic level. So this is not a sub magic level. This is a more important one at 310. And it failed this retest here. Well, it wasn't exactly a retest. Price really just fell right under. So there was no retest of that orange magic level ever after that this week. So I wouldn't call this a retest. This is more like just plain price failure. And this was actually a real important clue as to the direction of the week, because One of my trading rules is to trade in the direction of the last magic level cross. So this was clearly a magic level cross to the downside. So after this happened, we should have been taking trades to the downside. So I was traveling on business last week. I did not get a chance to enter any of these trades that I have marked here. I'm just kind of going back and marking the areas that catch my eye that I think will qualify as failed retests. And then we entered this period of chop here, and I could have probably put a signpost at any one of these red bars that starts a series of down moves, but this was like an extended period of chop. I only marked the last one here. And after that, again, it took a while before prices started to move, but late Thursday and into Friday, we got a major flush down. So now here we are at 288. We're very close to this next magic level at 285. It, in my opinion, is a foregone conclusion that price is going to come down and touch this orange magic level at 285. One of two things is going to happen. Number one, there's going to be a trampoline set up and it's going to pop up. Number two, there's going to be a bounce and then a retest of it. And I am of the opinion that retest is going to succeed, and we're going to see a bullish move coming out of it. But I'm not going to assume that that's going to happen until I really see it happen. Now, one of the things we need to be aware of this week is there's a lot of news happening this week. We've got a Fed meeting on the 14th and 15th, and it's options expiration on Friday as well. So there's going to be some volatility here. But if we zoom out a little bit, take a look at the bigger picture. This is a daily chart here, so I'm just going to hide those for now. So on the daily chart, we had this small pivot back on June 2nd. The next small pivot is on June 14th, although it's showing up on the June 15th bar because that's how TradingView tends to work. But the actual date is June 14th. And we're down here, we're very close to this orange magic level. So I'm expecting some sort of bounce here, whether it's a bounce into a retest, or it could also be a trampoline. I think there's a potential for a big move up once the news of this week resolves itself. Often some of the bigger moves up happen around these Fed meetings when everyone is hedged with lots of puts, and then the Fed comes out and says what they've always been saying and what we expect them to say. So as long as there's no surprises around that, what can happen is as that insurance, that options insurance gets unwound, then that can really fuel the market going up, coming into the following week. All right. The following week, looking into the 24th through the 29th, we've got a lot happening here. We've got a cheat code purple line day. We've got a Gann wave yellow, which is the peak of the Gann wave cycle, and we've got another small pivot coming up. So I think what we can expect to see this week is some basing activity, because the week after is showing pretty bullish on the contextual level. This context information is pretty positive for next week. And when we get into the time trades forecast, you'll see that as well. Okay, so that's the take on Qs, and let's go and flip over to time trades. So we're going to go over to Safari here, and let's take a look at Qs. One of the reasons why I'm kind of bullish for at least the following week, next week, I think is going to be, or this coming week is going to be a little volatile, but the week afterwards, I'm bullish, is if we look at short-term waves, and we talk about Mercury a lot here, and Mercury is starting to accelerate, as you can see here, as the yellow line is moving up. That's Mercury speed. You can see how Mercury speed has correlated with moves in the past. There's a nice association here with the last peak and a peak in Mercury speed. So we need to be aware of that. And it's coming up, speeding up out of its last retrograde cycle here. Okay, so that's one factor. The other factor is if we just look at the probabilities that are generated by the machine learning, we can see some positive activity here for peaking on June 22nd and June 28th. And that's interleaved with some, isolated down days. As I talk about in the user manual, these sort of one-off down days is not something I like to bet on in terms of trading. So this is kind of indicative of some volatility, some chop, but not a trend, right? What we're really looking for and how we should be using these probabilities is we should be, looking at the movements between the pivots, right? The next major pivot is coming up here, July 28th, and also looking at clusters of moves like what we see in July and what we see over here in October. That's really what we should be keying on when we look at the probabilities. So if we go and look at the rest of the indexes, we can take a look at spiders. So spiders has a very small probability of a move of a 2 standard deviation move up here on the 17th. That's Friday, so that's about 9%. And then there's kind of a gap here the week of the 20th, 21st, 22nd, and then we've got kind of a scattered cluster of down moves after that. So let's look at the Dow. So the Dow is reflecting really what I'm talking about here in terms of, we've got a small probability pivot on Monday the 20th, and then we've got some increased probability of up days and a reasonable size cluster here. So that would look to be the low risk play, is to look for something in the bullish direction for the week ending June 24th. Okay, let's take a look at some of the major tech stocks that underlie the Qs. So on Apple, we've got a pretty sizable 2 standard deviation probability of a 2 standard deviation move up for Friday the 17th at 72%. So that's pretty significant there. So that could really kick off this move up if this indeed comes true. So keeping a close eye on that. And of course, that is the same day as options expiration and comes a couple days after the Fed meeting. Let's look at Microsoft. Microsoft also has a little cluster of 1 standard deviation moves up for the week of the 20th. Not much happening here this week, but then we need to be aware that, we're still in the bear market, right? And any talk of a move up in 1 week is, when you put it in context, it's a counter trend move. Okay, so these are riskier plays, is playing the counter trend move. The bigger trend is down, but we are trying to make money on both sides here. So if that's not your thing, if you're not into the risk of taking counter trend moves, that's fine, that's good. Things are once things go up here, as we anticipate will happen. We don't know what's going to happen, of course, but we anticipate a green week, the week of the 20th. So then that would be a good opportunity to re-enter short at higher prices. Okay, so let's take a look at Meta. We changed the symbol for Facebook to match what's happening in the real world. So Facebook is now Meta. And again, we see alignment with this green week for the week of the 20th. Okay, let's take a quick look at crypto here. Actually, before we do that, I want to go back over to TradingView. I want to share something that one of our time trades customers shared with us, which is a pretty cool approach to short-term trading. So let's close that. Here it is. Okay, so this is a stock called Houston American Energy Corporation, and we're going to drop down to a 4-minute chart here. And one of the approaches that can be used here is to take a look at the trend coming out of a moon void, of course. And we get occasional requests for how to use the moon void of course information that's in the time trade script to enter trades. And one of the rules of thumb about the moon void of course is that you should expect fake outs and reversals. Okay, so the second rule of thumb for trading a moon void of course is to not enter or start anything during a moon void of course. So I interpret that to mean, don't enter a trade during the void of course, because it's subject to fake outs and reversals. So here we are with Houston American Energy Corporation. And we can see here, there's a void of course back on June 3rd. So this was last week, and then it ended. And then we see this period of fake outs and reversals, and sure enough, it did reverse. And then the first bar coming out of this period was a nice green trending Heikin-Ashi bar. And then we saw a significant move up from 459 up to 565, right? So that is a pretty big pump coming right out of there. And then it ended just as the moon entered Virgo, okay? So if something works, why stop doing it? The following week, this week, June 8th, exact same play. We've got the moon void of course, periods of fake outs and reversals, big reversal here at the magic level at 607. Moon void of course period ends. Check the trend. This is the real trend. This is what you want to jump on. And so again, we get a huge pump from 683 all the way up to 857. So this is a play that was identified and profitably traded by one of our time trades customers. So I'm sharing that with you so that you can get some ideas on how to best use the void of course as well. Okay, so let's go back to crypto and we'll take a look at Bitcoin here. Bitcoin here is in the midst of a mini pump, and we're going to apply our sub-magic levels again here, and we're going to show that sub-magic levels work well on Bitcoin as well. So this is a 24-minute chart. If you think that's a weird time frame, I use it because it divides evenly into a day. There's 60 24-minute bars in a 24-hour day. So let's no, yeah, that's what I want to show. Okay. So you can see here a few examples of where the sub-magic levels, and again, this is just a Fibonacci retracement tool, and it's using those Pythagorean levels that we've identified with the help of Connie Brown's great book. And you can see how they identified turning points here up at 31.5, and we can see this breakdown right here, and the price came down to another cluster of magic levels right at 29.3, including the 585 and 618 retracement, and then it pinballed back up to 31.4. And nobody knows which magic level these things are going to stop at, right? But I really believe that if you can combine, these two basic rules, like trading in the direction of the last magic level across, so that would be these orange lines, with looking for failed retests of the sub magic levels, that you can profitably scalp what would otherwise look like chop. All right, so we don't know here that the price is going to go all the way down to 28.8, but we do see it cross a magic level, came back, tested it once, tested it twice, failed, didn't. And this little red bar here, I'm going to zoom in, this little red bar here is really what you're looking for. Could be this bar too, either way. These are both indications of a magic level failure. And especially after two taps, when you start seeing red Heikin-Ashi bars, that's a sign that it's going down. And then on this case, we can just trade the breakout of the orange magic level. Price comes through, retest, fails, drops back down, and then breaks through. So we can just trade the breakout there, knowing that it's already had the retest. You don't want to enter over here on this first retest. Let it have the first retest. It's going to often need to gain some energy before it breaks all the way through. So wait for that first retest before entering. Okay, so that is a quick take on Bitcoin. Let's go see what the probabilities have in store on Bitcoin. All right, so the major thing that I'm noticing here, there's a big pivot high here on June 27th. Not a lot of activity on the moves up, some scattered activity on the moves down. Doesn't look like a trending environment at all. So if you're nimble, if you've got a good system that you trust and can apply to short-term scalps, then absolutely that would be the way to go. So take advantage of this big pivot high here coming up on June 27th, and I tend to put a little bit more weight on these pivot highs versus 2 standard deviation moves down. If price comes up into this area here, there's certainly there's a very good chance that it could come down on June 25th. But by all means, take profits if you're up here. There's no point waiting a couple days and taking the risk of a 53% 2 standard deviation down day, right? But in general, I see this pivot high as a bit of a magnet moving forward. And of course, accelerating Mercury helps Bitcoin as well. Let's take a quick look at Ethereum before we close the call. Ethereum has a really nice cluster of 1 standard deviation moves up, and that's complemented by this pivot high over here also on June 27th, okay? So Ethereum is looking a lot cleaner than the Bitcoin chart at the moment. It's unambiguously bullish. So that would look to be the safer play at the moment. Okay, so that's it for me this week. Thanks very much for joining me. And I look forward to seeing what this week brings. And thanks again for using time trades. Bye now.